So, if I were to start over and make my first $10,000 day trading again, this is what I would do. And honestly, it's so brain dead that I can give you this exact process that I'd follow if I was back at step one, and I believe that you'd be able to get the same results. And whether you've been in the game for a while and you're just not seeing any results, you're still unprofitable or whatever, or if you're new to the space, want some direction, you will for sure, definitely gain some value from this video. So, I will preface this by saying that this video is an oversimplification of the entire journey because day trading in itself is not an easy career path. I'll never claim that day trading, consistently profitable day trading, is an easy career path. And the fact of being consistently profitable long term is much, much different than making some short term cash. So, with that being said, the pathway that I'll be explaining to you in this video is more of a modern approach, something that you'd see in 2026. And the main primary driver, the vehicle that's going to get you to that first $10,000, in my opinion, the best option is using prop firms to our advantage because there are pros and cons to it, but for sure, a lot more pros for people who are strapped on cash and need to maximize the value of trading. Anyway, let's cut through all that and let's get straight to the sauce. That's what you're here for, so that's what you're going to get. So, just like I mentioned, step one is I would strictly only use prop firms and I would take advantage of how their payout structure, their payoff structure is. And what their structure is something called a convex structure. And so it is imbalanced in the amount that you pay to get access to an account and how much value you can get out of that account. So you would pay $80 or so for a 50K eval, right? You get access to 2K drawdown on a demo account. But once you pass that 2K, then allows you to actually make money. And so when you lose that 2K, for example, you're not losing a full 2K out of your wallet like you would have if you had a live account. You would just lose your $80 investment in the beginning. And with that being said, you can take advantage of even slightly positive EV strategies and things that may not even work in a live environment due to so many different variables, but can work just because of how that payout structure is. And so the prerequisite for even getting into this is just understanding every single prop's rules and following the rules and adhering to the prop firm rules that make sense to you, right? So the way that you trade and what you decide to come up with kind of has to match with the account rules that you're buying. And so I'll do some research and study that. But from there, let's move over from the prop firm talk to actually research and study on technical analysis. So researching and studying on something in the realm of technical analysis, right? Because technical analysis is your language, your ability to communicate with the markets, to be able to understand and comprehend what you're seeing. So you pick something and you stick with it. I don't care necessarily what you want to trade like. It's just the main core idea here is to not get stuck in that shiny diamond syndrome. Testing's not bad, experimenting's not bad, but being in that phase of just constantly trying the next best thing or what you think is going to work and jumping from strategy to strategy is not helping you in terms of elapsed amount of time. So, just pick something. It could be ICT concepts, it could be opening range breakout, it could be using indicators for whatever reason, volume profile, etc., and stick with it. And from there, that's where you would start the back testing process, and that's where you would start to identify your potential pass rate for evals, right? In the scenario that you're going to be trading prop firm accounts. And obviously, you're going to have to forward test this a little bit. So there's going to be a time frame of back testing, but also a time frame of forward testing. But in terms of what you're back testing, I would try to stay closer to the current time that you're in because the current regime, the current seasonality, and the current market conditions will be different whenever you're back testing and further away. Sometimes you can identify identical conditions, sometimes you won't. But the closer you are to backtesting around the present time, whether it's like the range of this year, the range of the last 6 months, the range of the last year, depending on how your trading style is. So if you're a scalper, you probably don't have to go too far back, etc. But the core is when you're backtesting, try to stick close to the current regime, seasonality, and market conditions because that'll give you the highest probability of being able to pass your evals because it is the most similar to what you're trading and what you're going to be trading, right? And that's the best that you're going to get because you can never predict 100% how future market conditions are. But if you're trading within the same time, like in the same year of these conditions, you're more than likely going to encounter similar conditions moving forward until they stop happening, right? And then it shifts. So, with that being said, you need to identify a strategy. And in the case that I'm referring to, the fastest path to getting onto an eval and whatnot is probably discretionary price action. So, a discretionary price action strategy with a win rate around 40% or higher, with a 2 RR or even a 1.5 RR, and I'll explain why that is. Um, so, with a 2 RR and a 1.5 RR, if you think about how much money or how the risk to reward is whenever you're going to pass your evals, and you look at how much you need to make and the consistency rules that you typically need to follow, if you just have a 1.5 RR and you use enough risk in the eval stage, you can pass in 2 trades, assuming that you win both of those trades. You obviously just risk a lot in the eval phase for that. Compared to low risk and a high RR, which inherently tends to come with a lower win rate anyway. So that could be much harder in terms of trying to get from eval to funded quickly. And I'll also explain why it's much better to kind of go with the lower RR strategy for prop firms too, in a little bit. But that's just a little section of why you would want to stick with a 1.5, 1, or 2 RR strategy for prop firms specifically. It just works better for you. The numbers work better for you. And it's easier to adhere to the rules that way. But I'm not going to go in depth into specific models or strategies in this video just because this is not the type of video for that. But if you want me to, if you want me to hop on the charts and do a deep dive and show you actual models, show you actual discretionary price action strategies, and or whatever you are interested in, I can. Just let me know in the comments and I'll show you. I'll make a video on it. But yeah, the next thing is after you identify a strategy with that win rate, and also when you're back testing, make sure that you try to keep track of your pass rate as well on like a week to week or month to month basis. So if you have a pass rate above 40%, maybe like up to like 70% pass rate from eval to funded, that's pretty good. And also with that in mind, your win rate uh, in the strategy in itself being 40% or higher, but a lower RR, that's excellent. You get those dialed in. Now we just got to worry about some other things. And the next thing I would worry about is making sure that we dial in on a strategy that allows our trading psychology and risk management to not fall apart. And what does that mean? It means picking and this goes back to the whole why we don't want to do the 10 RR thing in prop firms, not only because it's a disadvantage in terms of numbers, but because typically when you're losing more than you're winning, your psychology will take a hit. And I'm just speaking for a general audience, right? We don't know necessarily who you are, and maybe you can withstand that kind of mental strain, but I'm trying to make this easy on you, right? Mentally. So, lowering the risk to reward, increasing the win rate, and giving ourselves a strategy that gives the trades, the per trade basis, more breathing room when you're in the markets, right? Bigger stops, smaller take profits. Uh, Typical rules like that helps us not mentally fall apart while we're executing, allows us to be better operators when we're in the markets. And even just having something like that keeps our mindset healthy, and it's a good routine for us and allows us to follow our rules, right? We're not going to be having strategies that gives us, I don't know, 20 entries a day, right? We're not going to be over trading. We're not going to sit there and analyze the markets for 5 hours straight. We want to be in and out, maybe like an hour in the markets. Don't overthink too much. And we know that the numbers make sense because we did all the back testing, the forward testing. We got all the pass rate percentages. We aligned it with the best account types for the prop firms tied to your strategy, and we have all the probabilities to our advantage, right? And so we just pick something that's easy for us to follow, that gives us that peace of mind compared to having a high RR strategy with a low win rate that every single loss is just kind of tearing you apart, and you're mentally not going to execute better as you continue to keep trading that account. And next thing you know, you just you say fuck it. When you start getting to the fuck it part of your trading, you know you did something wrong. And so, uh, one of the core things here that we need to talk about that I've mentioned a few times is definitely calculating the pass rate from getting eval to funded and from funded to payout. Whatever that cost is, right? You got to run the numbers. Make sure it's lower than the payout that you're aiming for. So let's just use $2,000 payout cap, for example. If you run the numbers on your back testing, your forward testing, and your strategy, and the numbers crunch over 2,000 to get to a payout, obviously don't use it. Don't use it. But if you can maintain, under $1,000, less is more, obviously. If you can maintain under $1,000 to get to a payout, you have an extra $1,000 that can be your profit. And so that's the core thing of this, right? Is not necessarily trading, but arbitraging the accounts. So it's a little funny that we're calling it day trading when it's really just you running an expense to profit type of deal with the accounts. Like it's basically just it's basically just as long as the cost of you getting from eval to funded is lower than your payout. That's how you're going to be profitable with this entire method, this 2026 method, unpatched. But anyway, that's a whole different video, right? Just talking about how prop firm trading is not actually like how the live account trading really is. But moving on from there, the next thing I would do is use a risk on profile for evals, which I mentioned a little bit earlier, which is risking more money during the eval phase because you don't make any money in the eval phase. And so we got to make sure we pass in the least amount of trades possible. Knowing, and this is the most important part, knowing that we have the mathematical advantage, right? The probability of us getting to a payout is high enough to where we're not losing more than what we're asking for when we get the payout. That's the most important part. So making sure you have those numbers first before you do anything else. Before you even buy an account, before you even go on their website and put your card in, you should have these numbers already. You should already know, yes, I have a 73% pass rate. I have a 40% win rate on my strategy. I can typically pass in 3 trades. I might blow, one of X many accounts, but I can typically get an expected value of $800 per payout cycle. You should know all this before you even touch an account. All right. And that's the whole game. The whole game is just knowing your expenses to get to the payout. That's it. That's how you get your first 10K right now in this current trading modern age. So now we got all the math out of the way. What's next? Well, what's next is you fucking trade. I would just fucking trade at that point. I got all the numbers, I got all this shit figured out. I fucking trade. Simple, quick, in and out, day to day. Just let the math do the work. You let all the math calculations take up all your time in the beginning for a reason, right? All that upfront work, all that upfront investment and cost of yourself trying to figure all these numbers out, crunching all these numbers that's super tedious that you don't really care about. Well, this is where it pays off because you know all the numbers. Now you just execute. Now you become the operator. Now you let the numbers do the work. And so that is the fastest path you could probably take that I know of that you can get to your first $10,000 day trading in 2026. Now, if you want to do it the corny way, right? The way the like some alternatives that I've seen is I've seen people just join a course and get into this, ex mentors or whoever's mentors group and they just copy trade their signals. Or they just full send accounts and gamble and they don't really have a strategy tighten in. They don't really know any numbers. Or they're just quitters and they never get there. Look, I'm making this video because I don't think you're one of those people. I think you're the type of person that has the time, the effort, the resources to be able to put in the upfront work, get the numbers right, and be able to execute correctly. Or else I wouldn't be making this fucking video. But I wouldn't necessarily define this video as something that properly gets into the weeds of day trading ins and outs as a consistently profitable day trader, but this is definitely a video that is for people who want a fast track, an introductory video into modern day trading and how it's done now and how people are doing it now, or at least from what I've seen and what I perceive to be the best method, and people who are just looking to start getting their results in this industry faster than how it used to be, where you had to use your own capital. But I hope this video helped. I usually just run these free form. I don't ever script anything. I just talk off the top of the dome. But everything that comes out of my head is straight raw, honest sauce. I'm just trying to provide you some value. And all that I really ask in exchange is if you fuck with me, then shit, let me know. Give me a like, give me a comment, join the YouTube fam, and just let me know what you want to see, what you want to hear from me. I'm more than happy to make videos tailored to whatever you're curious about because I love this space. It's my passion. I'm going to do this until I die. And I guess it's fun to talk about. I don't really have people to talk about it with. So I make YouTube videos talking about it. Anyway, enough for that rambling. Thanks for watching this video. So hope this helps. We'll talk soon. Later.